Hi, Caroline. How are you today?
Yay, good, James. How are you doing?
Yeah, very good, very good. Back for another episode. You've had a few guests on.
I'm loving the interviews, and we've got some more
Yes.
exciting ones lined up as well in the coming weeks.
Yeah, they're great. And I think it's nice to hear for our listeners to hear other people's journeys and what they've done and the challenges that they've overcome as well. So today we are going to be discussing what are angel investors and how do you get them?
Oh, I know. It's like a big question. When I first introduced the idea of other people's money, people are like, what is that? What is that? And then when you layer it and say angel investor, they're like, who are these angels?
Where do I go? What website do I go to find them?
Where's the list of angel investors? And do they have large wings flapping around with their big pockets full of money that they're just going to give you? Yeah, a bit different to that.
Now, on the concept of angels and the term angel investor, I don't particularly like the word angel because it does give you like a strange idea, and I think a private investor is a much better way to refer to it. An angel does just give you the idea that they're going to come from somewhere randomly, drop some money with you, and they're just there looking after you. But that's definitely not the case, is it?
But yeah, I think the connotation of an angel overlooking us and taking care of us is kind of weird when you mix that with money, isn't it?
It is a little bit, and you've got to go out. Angels won't just come to you, and private investors won't just come to you. You've got to go out there and start talking to people and raising awareness really of what it is that you're doing.
Okay, so let's talk first of all is what is a private investor or angel investor?
Yeah.
What is that? What is it?
So an angel investor, a private investor, is somebody that has money that maybe it is performing for them at the moment, but they can see an opportunity for it to be working harder for them, to be earning that money to earn them more interest, basically, so that they just want to get their money working as passively as possible. So it's literally somebody that has money that isn't performing very well, that wants to get it working for a hands-off return. That is effectively what an angel investor is.
Yeah. So if you think about anyone from the very, very high levels of investing, you can think of people in their pinstripe suits in the city, buying derivatives, and all they're doing is getting their money to work harder, right? By investing in a commodity or a product. But to the lay person, having money just sat in their bank, earning them maybe at best 4% right now if it's locked up forever, when inflation is at, well, certainly double that, they're a bit stuck if they're not trained in derivatives, commodities, and the stock market.
Yeah, and also that bears a massive risk, because whilst the stock market can go up, it can also go down. So a lot of people are they're looking for a safer way to get their money working as well.
That's a scary place for most people, the lay people, to understand or get their heads around, because it's not an everyday experience for them. But again, I think lots of people have an idea of what an angel investor is, in that they have tons of money, they're in a successful job, and all of this, living an amazing life. And why on earth would an angel like that give you cash? They're not necessarily tons of money in the bank. It could be someone with £10,000 or £5,000 that they've got hidden under their mattress,
and they're literally saving it for a rainy day type mentality.
Yes, maybe their nest egg that they've been squirreling away, and they're sitting there thinking, I'm barely making ends meet. I can barely feed myself with my pension or my benefits or whatever it is. And you can come along and say, well, actually, if you give me that 5,000 or the 10,000 that's under your mattress, I can actually bolster your income so that you can feed yourself. Now, that's the other extreme, isn't it? I've gone from really,
super high earners, people on footballer salary type thing, going, I've got too much money, to somebody that's like, I haven't got enough money coming in on a monthly basis. Almost, how can I earn a bit more? And I think now's a great time if you're trying to go out and either raise more money or raise your first batch of angel investment. Now's a fantastic time to be doing it, because you don't almost have to go and try and bring up that type of conversation about inflation, about interest rates are really bad, because other people are doing it for you, because it's what everyone's discussing right now.
Yeah, it's brilliant. You are actually helping people. I know we're sitting here from our selfish point of view of give us our money so we can build our empires, but in actual fact, you are helping other people that, if they stayed doing what they're doing right now, financially would be worse off.
Yeah, correct.
Affecting their lifestyle, and quality of life. So we've got to view it as a win-win scenario. You're not desperately out there seeking to sniff people's money out. You're actually offering a service that they're desperately needing.
Yeah, and we prefer to work with people that we already know and people that we like as well, because we would, if we do see it as helping people and giving them a better return on their money, giving them something that they can't get elsewhere. I'd much rather give that to someone that I know than to a complete stranger or a bank or a business person that is already making too much money, type of thing.
Yeah, but this leads perfectly on to the next big conundrum, right? Once someone who's just maybe starting out on their property investment journey and they've got their head around the fact that they can use other people's money, they then go, okay, I've got the idea of this like angel person, but how on earth do I find them? Because I don't know anybody with money, no friends or family with money. All their social circles have no money. So where do I find them, and how on earth do I convince them to give me the money, right? And that's very hard for someone to remove themselves from that mentality and mindset to start understanding that it's not necessarily people that you know. So I know that, James, you and I were trained to start with friends and family. Yeah. And while I would say 95% of our students go down that route, I did not. Because I had the failed business. I'd already been to friends and family because of that failed business. So I had to take the lessons of raising money privately and take it to strangers.
Yeah. And which is much harder, because with the people that already, I think because the people that, in your social circle, whether they've got money or not, they already kind of have an element of trust. They already know who you are. So if they did have anything at all, they're going to be more likely to give it to you, I think, than a complete stranger, because you need to then build that trust. And, if somebody just tapped me on the shoulder on the street and said, hey, could you lend me 10 grand? I'd be like, who the hell are you? And no, go away type mentality, because you just don't know who they are. You're like, how am I going to find them if they don't pay? How am I going to, get the money back from them? So I think there's so many more, inherent risks as the angel investor lending to a complete stranger.
I would argue against that, Jim. I really would. Here's the debate. So if you've got friends and family who are very close with you and have strong opinions about what you should or should not be doing, and maybe you are going into, investing in property that they don't either believe in or back, why on earth would they trust you, right? Because their opinion of you might not necessarily be a positive one, right? Even though you're saying that the trust would be there. Well, maybe not. Maybe because your past is not so great. All right. So if you can actually master getting people that you don't know to offer you the money without you asking for it, then that skill, I believe, is a very powerful skill to have.
It's a massively powerful skill. I wouldn't, and my opinion of it is it's not the easiest thing to get started on. But I think it's if you've got that skill, then you'll be able to raise money from absolutely anyone, because you've just proven it that you can just go to a complete stranger and get them to invest in your business.
Think of the people that you interact with on a daily basis. You have no idea if they have money or not. And if you have the mentality that you have to work hard for money, money is scarce, it's going to be really difficult for you to get it, and no one's got it, then guess what? You're never going to see it. It's that whole belief. You have to believe to see.
Yeah. No one runs around saying, I've got X amount of money in the bank. So you've just got to treat it as if they might do. Anyone might have funds. If they do, fantastic. If they don't, it's fine as well, because if you're starting to tell people about what it is that you're doing, at least you're raising awareness and building your own confidence about what you're doing as well.
Yeah. So let's paint the picture then. Someone who has never invested in property before, has no capital, is wanting to raise some private money to get started. They're starting to view properties. They're crunching the numbers on these properties they're doing, and they're maybe on the cusp of potentially putting an offer in that may or may not be accepted. What are they honestly going to say to people around them with confidence that's going to allow somebody to say, hey, I'll give you 30 grand.
Well, I think you've raised a good point there, because if you're starting out, you can be doing a lot of things without needing the money to start with. So there's actions that you can be taking before you even will need the finance.
Yeah.
And as soon as you're starting to take those actions, that's when you need to start telling people what it is that you're actually doing. If somebody asks you, how's your weekend? Oh, it was great. I was viewing some dirty, horrible, smelly houses. Because at that point, they're going to go, oh, why were you doing that? Are you looking to move? And it's initiated a conversation.
Yeah, there we
So
go.
for me, that's we're often asked, I need to go and raise some money and then I can start looking at houses. But that's a big no-no, because you need to be taking action, and that will help you in the raising of the finance.
So you've got people who are waiting until they have enough money to get going. Now, you and I know that if you wait until you have enough money, we'll never get started. I'm really blunt with people when they say, why would an angel investor give me the money? And I say, well, frankly, if you don't know what you're doing, they're not.
Correct. I think your knowledge is the big thing that's going to shine out, and your plan, your process. And ultimately, whilst they are investing in you, they're not really investing in you, they're investing in the property.
Once I got my head around that part, and it took me a while, I'm not going to lie, this was a massive mental block for me, because obviously I was in a bit of financial tricky situation, that if I can talk with absolute confidence and knowledge, so when a potential investor asks me a question and I can answer it because I know what I'm talking about, then they're going to be more confident. Then they're going to want to give me more money. And then the positive cycle of attracting the money and putting it into the deals and growing, and then telling more people about it. And then more people want to get involved in it. And all of that comes into play. Because when the angel investor is getting that great return, they don't want their money back.
No.
And they want to even find more money to give you.
And typically, if the first time you speak to somebody about it, they're probably going to start asking you questions that maybe you don't have the answers to immediately, because it's the first time you've done it. So if you can start thinking about what questions they might have and how you can be addressing that, because if you can answer the questions as soon as they're coming in, that will massively help build their confidence in you, that you know what you're doing.
Yeah. So you're showing that you've thought of all the potential cock-ups along the way and have got that covered. That is very powerful to someone who might be thinking about doing it, but maybe a little nervous. And of course, there are people out there that have different attitudes and appetites to investing. So someone getting in the current market 5% per annum, that's incredible considering what they could get with that money sat in the bank at risk, because only £80,000 or £85,000 is covered by the bank. In policies,
But you're probably not even getting 5% in the bank right now.
No. So, I've got angel investors that I pay 5% a year to, and they're delighted with that. And they're actively seeking out more money to give me at that level.
So it's a better alternative than they have found themselves elsewhere.
Exactly. And then I've got other investors who are far more aggressive with their appetites. And they're saying, well, I'm not going to do anything unless it's 12%.
Because they know they must have a way that they can probably get 12, 10 or 11% elsewhere. So they're kind of going, well, it needs to be more beneficial than what I'm currently doing.
Correct. Now, interestingly, in my experience, what I've found, the people with the most money are the most aggressive. Yeah. Absolutely.
Because they've got knowledge of how they wouldn't have all that money if they didn't have knowledge of how to make it and how to make it work for them as well.
And so I'm going to say to all of you listening here, you don't need to be chasing after like that golden goose that's got the millions of quid in the bank in anything.
Because you probably wouldn't want to pay them the rates they're going to request.
You want to be speaking to your neighbor who's just been living quietly next door to you for ages and suddenly finds out that they've got a little inheritance coming their way, or a little nest egg that they've been building.
Or they've just saved and they've thought, I'm going to put this aside for as and when I need it.
The other thing is it's such a win-win. I'm doing a lot of angel investing at the moment, or raising angel investment at the moment. And I love the process of explaining how it works and someone going, that's better than what I'm getting right now. Cool. Right. And what I'm seeing is most people have the appetite to leave the money in for as long as possible because they can get more money that way.
More money. And that then becomes that, how do you pay these people back? Because obviously you're going to be paying them the lump sum, all the cash that they've given you, but you're also paying them interest.
Yep.
So typically, do you pay people on a monthly basis, or do you pay them kind of a lump sum at the end along with their capital back?
I personally prefer to pay them their interest on a monthly basis. I have got one angel that prefers it quarterly, but I like that because it means I keep on top of what I owe them.
Yeah.
It means that when it comes to me selling or refinancing, they get their full capital back, and then that's nice and clean. You put 100 in, you're getting 100 back, right? They also, what I like about it is they also see the benefit and feel the benefit every month.
That's the big one for me. It's not easy, but as somebody, as soon as the passive income from their perspective starts coming in, they're like, oh, this extra, £300 a month that I'm making from, Caroline, that can cover a new lease on a car. That could be, I can put that aside. That can cover the cost of a holiday, and all of a sudden it's kind of, they'll start spending that extra money immediately that you're giving them, which means they're going to want to give it to you again and again and again. And that's typically why when we say to people, oh, here's your money back, they go, no, keep it. Because they're thinking, oh, where am I going to get that extra £300 from that I've been getting for the last year?
When you're working with institutional money, like the banks, there's a whole time period of going into that agreement where there's forms and red tape and credit profiling and blah, 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 blah. And then in some cases, they might charge you a fee to...
Yeah, we're talking about how fees can almost be more than the actual interest earlier.
For you as a property investor, this is a massive win because you're saving an awful lot on the fees. It's far more flexible.
It's much more negotiable as well. The bank are going to say, right, here's the money. It's these terms, take it or leave it.
Yeah.
Whereas you might have an angel investor who says, you might offer them a lump sum at the end because you're doing a flip and they go, oh, I really want the money monthly. And you go, well, actually, okay, I can do that for you. You can kind of give and take. And you say, oh, I might have to drop the interest rate in order to do that. Is that okay? It's so much more flexible and you've got a conversation going. You're never going to hit the, oh, sorry, your credit profile says no, so we're not going to lend to you.
It is a tricky concept to get your head around when you first start because you don't feel confident because you've never done it before. It's uncomfortable. You're talking about money, which is frankly bad manners and a bit crass because that might be the way that you've been brought up. The idea of asking someone for money might deem like you're in some way in trouble or you're struggling. And so your pride doesn't let you go there. And there's so many other emotions and beliefs and values attached to this money piece than just what is an angel investor and how do we find them. There's a lot going on there, and we have to work on all of those little elements to kind of get over those issues, don't we?
The upside as well is once you've done it with one person and they've started to see the return coming to them, as investors, you're always going to be needing funds. You're going to be needing more and regular, and as you start to build your portfolio, the size of deal you're going to be doing is larger. So that you can then start saying to people, if there's anybody that you know that would also like to benefit from what I can offer, could you please put me in touch with them and I'll pay you a referral fee or something along those lines. So your angel investors who are happy customers can start doing the heavy lifting for you and start raising the money on your behalf.
Yep. I love it.
It all stems from, as I said, having a good deal, which is why we say you don't need that money instantly because you're not going to have a good deal. The very first property that you go out and view probably won't be a fantastic deal with loads of discount that you're going to be buying straight off the bat.
Yeah, I know. Quality deal, raise the money. Those are the only two things that you need to even think about as an investor, and then outsource everything else. Spend your time on the high value tasks.
Correct.
Love it. Anything else, James? I think we've covered it.
Yeah, I think that's kind of explaining the basics, the concepts of angels and what they are. If you've got any questions, then obviously about angels, maybe we can do a follow-up if there's more. So on our community, any angel related questions, comment there and we can do maybe a follow-up if needs be, if our listeners want that.
Brilliant. Great speaking to you again, James.
Awesome. Good to speak to you as well, Caroline, and I'll see you soon for the next one.
Brilliant. Take care.
Bye.